everyone. This is Jackie Cooper with the GBA Talk Show, as well as the talk show for Crypto and Mom 2. And I want to welcome everyone to this episode. I have a very special guest on that I'll introduce in a quick second. For those that are new to the GBA Talk Show, the GBA is a member organization that does a great deal of educational programs. They have an event coming up in September dealing with artificial intelligence and other blockchain related topics. So definitely visit the website that I'll also have in the blog below so that you can register and check out what they're doing educationally, and in addition to a lot of the other workshops and activities that they have throughout the year. Crypto Mom 2 is my talk show, and I talk about a variety of topics to include legal policy, legislation, and other conversation topics that are within the blockchain, to include, well, artificial intelligence, but also metaverse, NFTs, cryptocurrency, Bitcoin, Ethereum, blockchain use cases. This is an evolving community, and there is a lot going on, and a lot that impacts both the consumers as well as the businesses. And so that's why with the talk show, my goal is to provide resources to you. And those resources are also integrated within the Blockchain Legal Institute, which is a centralized library for the decentralized space that we're in. So definitely check that out. My background is I'm an attorney, but I'm also an educator currently in the special education space. And I'm also a blockchain entrepreneur. So I've been learning a lot about this space, and as a result of that, I believe in the thought of passing it forward and educating everyone so they can make informed decisions. Today, my guest is actually involved with credit unions and the banking area, and I find that this whole area is very important for us to be involved in. I know that I'm a member of 2 credit unions, and I'm very excited, for that, because they've always been very from a customer service perspective, very engaged, and also they're always up to date with what questions I have. And I know that the association that we're going to be talking with and to today also is very forward thinking, and they look at everything that's going on within the policy and fintech side, and how does that impact the consumers and the customers in our community. So with that, I would like to thank you, Kyle, for coming on. I know that you are in charge of an association that is very impactful. Credit unions, again, people might not know why credit unions were created, but they are they're community oriented. And so I really would like you to kind of share more about the purpose of the association, and then a little bit, we're going to talk a little bit about your story, how you came to be there, and how you're leading it, and then also the guidance that you and the association is providing for the credit unions towards the idea of blockchain, cryptocurrency, and this area. I know there's a broad topic. So how are you doing today?
Doing well. Thanks for having me on. One thing to mention, I use the term the association. Just to be clear, my employer is NCUA, National Credit Union Administration. We are a government agency. I am an employee of the federal government. Yes. We are the insurer of America's 4,800 credit unions. We provide deposit insurance exactly like FDIC does for banks. So FDIC is kind of well known. Our government agency, NCUA, is not as well known. So that's why I say, if you know what FDIC is, insuring your checking account, NCUA does the exact same thing. We have a deposit insurance fund that is smaller than FDIC's, but it's the same sort of thing. The FDIC insures more assets because banks are larger. There's mega banks. And I serve on a 3-member board. We're all appointed by the President of the United States, confirmed by the U.S. Senate for terms that are usually about 6 years. I've got a couple years left on my term. So I don't single-handedly run this agency, anything, but I serve on a 3-member commission, and we vote on things. And currently, the chairman is Todd Harper. He's my Democratic colleague. The current sitting president determines which of us is the chair of the agency. So that's where it is now. And, it's traditional banking. It's very Main Street. Credit unions are auto loans and mortgages and regular checking, direct deposit, ATMs. I mean, it's very Main Street, not Wall Street. 85% of the entire system is car loans and home loans. So that, like I said, very Main Street stuff. And my job is to protect that insurance fund, the safety and soundness of that. And my interest in blockchain, the reason we're on this call today, is because I think it can be useful, but more to the point, if we're going to hold credit unions responsible for their financial performance, we need to make clear that it's okay for them to experiment with new things like they've always done. And I don't want to see credit unions go the way of Blockbuster Video because their regulator wouldn't let them compete. Okay, and blockchain provides ways for traditional banking institutions like credit unions to do things better, faster, cheaper, and more secure. So that's the long and short of it.
So my one of my questions while you were sharing is, how do we, and then possibly how do we teach credit unions how to use the blockchain? And then how do we guide them where to go for if they want to integrate blockchain into their services? Have you been looking at how to do that? Because obviously, I know banks are. So, how are we going to assist other markets like the credit unions?
Yeah, to be clear, from our perspective, right, we're the insurer of America's 4,800 credit unions, and we are the regulator for about 2/3 of them. The others were their insurer, but their regulator is their state government, right? Their state charter. It's not our place, I don't think, to be in favor or against any particular technology, and certainly not any provider. I would say government's bam bam. It doesn't realize its own strength. What it says and doesn't say lands like a ton of bricks. So the main thing we have to be in favor of is the existence of credit unions into the future and not going the way of Blockbuster Video. So that's what we're in favor of. I'm very proud of the fact we put out 2 pieces of broadly, I would say, pro blockchain guidance, which is 2 more pro blockchain pieces of guidance than all the other agencies have put out in the last 2 years. And we haven't put out anything negative. The point of that is just to demonstrate that we know this thing exists. And listen, I like to learn about these things. I like to stay educated. I need to get smarter on it. But the experimenting and picking what to use and what use cases, that is for credit union management. And we can't hold them responsible for their financial performance if we are handicapping their ability to experiment the same way they've always done. And I think you agree, crypto itself gets a lot of attention. That's the shiny object. But the underlying technology is maybe not as sexy, it doesn't get the headlines, but just flat out useful, And if you're old enough to remember the .com boom, remember that, 98, 99, and a lot of people first heard the term .com or heard about, the web because of the stock market, because there were IPOs and the NASDAQ was soaring, and then it all crashed in 2000. But it wasn't a fad, it was an investment bubble. This new thing back then called the World Wide Web was not a fad, right? It's changed our entire lives.
Yeah, it has.
And I the obvious analogy here, right, is, you see the price of Bitcoin and other things go up and down. CNBC now has them rotating on their screen next to the Dow Jones. And that's all interesting and that's cool. And I think Bitcoin's really neat. But just like investing in .com stocks is different than using the internet as a tool. Credit unions use it as a tool. They did email, they had website, they have online bill pay, right? That's the least sexy part of it, but I think you agree that that's where blockchain can be useful. We've seen it in faster payments, more secure, 24/7. Title, if you ever bought real estate in America, you know how little clunky and old school our real estate title system is. It's the reason there's title insurance, which is very expensive. It's obviously great use of a blockchain, right? Recording transactions that are immutable in public. And again, like I said, credit unions, right? They do car loans and home loans is the core of it. What do they both have in common? Transfer of title.
That's exactly right.
And yeah, so that's a use right there. And there's a number of other things. Identification. I even hesitate to sit there and tell you ones I've heard about because I don't want anybody listening to think, oh, well, the ones he said, our regulator thinks it's okay to use those. I mean, I think it's going to be very different, but it's useful. And I got to tell you, as a government agency, it is not easy to get us to be comfortable with some degree of failure. It's just the way agencies are set up. If you're the examiner, Jackie, for a credit union, it fails, it goes, poorly. Everyone's be like, wait, who's their examiner? Jackie, what did she do wrong? Meanwhile, you're not going to get any credit really if they experiment with blockchain and they lower some costs, right? You don't get any love for that. But you're going to be immediately focused on if there's a disaster. That is the incentive structure of government agencies. So it's hard to say, listen, there's going to be experiments and there's going to be failures. And that's true of every new technology. I had a financial journalist say to me, are you worried there's going to be problems if you let credit unions do this stuff? And for one thing, we're not your parents' credit unions. We don't let or not let you do things, except in certain situations we have to as an insurer. But I said, am I worried there's going to be problems? No, I know there's going to be problems. Every new technology has downsides. I mentioned before, there was 0 plane crashes before we had planes. No, centuries, right? You can read the entire Old Testament and New Testament, and you will not find one aircraft fatality the same way you don't find a car crash and you don't find a computer virus, right? Do we want to go back to those times? Hell no. We like airplanes and computers, etc. So it's always 2 steps forward, 1 step back. Of course, there's going to be problems, right? You didn't have internet hacks before we had the internet. You didn't have scams and ransomware and all that. But we don't want to throw out the internet because of that. As a matter of fact, even those problems can actually be job creators because, for example, in America, we have not only the best internet industry, but we also have cyber defense industries, antivirus software. Yep. Even the problems can create, jobs and investment. So, yes, there's going to be problems. It's going to be bad. Absolutely. Always has, always will. But you know what? As long as you think the riskiest thing is to not innovate, then it all kind of makes sense, right?
So I think the 2 things that you shared, which for the listeners who are on both the audio side as well as the visual side, I want to point out, blockchain is the technology which is underlying the transfer of information. Cryptocurrency is a little different because that is a coin, whether it's a token or Ethereum or Bitcoin or whatever. So the idea of credit unions looking at the use case of integrating blockchain to secure information, to secure privacy, that type of thing, is going to be probably approached a little differently than the idea of having credit unions maybe accept cryptocurrency or Bitcoin and into the savings part of their hold, so to speak. So I see 2 different areas. I see the blockchain integration happening possibly sooner than I see, but I could be totally wrong, than I see the Bitcoin or the cryptocurrency side, only because of so many other factors that are within the definition of what a cryptocurrency is.
Yeah, and so let me draw a distinction here, and it's one I'm proud of, but listen, maybe I'll be proven wrong. I said our agency put a couple people's guidance out, right?
Right.
One thing to say is, at an agency, right, you pass rules that have the effect of law, right? Congress gave us that power, same with the Federal Reserve, the OCC, etc. But when I say we put out guidance that just said, yes, these things exist, they may be useful, here's some best practices. The reason it was guidance and not passing a rule is for the obvious reason that it didn't break any rules.
Exactly.
We didn't have to change anything. But the reality is, without at least a positive head nod from your regulator, people were frozen. It was pencils down. Not maybe because they're afraid of getting in trouble. They don't want to make their exams any longer than it has to be. If you've ever been through like an audit from the IRS, believe me, you don't bring anything up yourself.
That's right.
You don't voluntarily bring up anything that could prolong this, right? There's that. Then there's also just, listen, you have things to do at a credit union or a bank that require resources that don't have even a hint of government issues with them, right? So why not go down that route? Why do anything where you're worried about, a raised eyebrow from your examiner, right? So we put that out. Now, on the other hand, the bank regulators, and obviously, I have a different view, but maybe they're right in the long run, put out kind of guidance the other way around. They didn't say you can't use anything involving digital assets, blockchain. They said you have to get approval first. The words were written notice of non-disapproval, okay, from your examiner. Now, in neither case, as my agency or the others said you are disallowed to do something or promoted it, but the language matters. The way they phrased it is digital assets, okay? And I think this gets at the distinction you're making. They use two words, digital space assets. They could have, and I think, I'm going to guess here, that what they're getting at is crypto, volatility of what, pure cryptocurrency, the way we think of it. But because of the phrasing, digital assets, I can tell you for a fact that projects have halted at banks that have nothing to do with anybody investing in anything. Remember we said about title transfer, right, for automobiles?
Yeah.
Or using blockchain for identification. If you wanted to, you could say, wait a second, is that covered by digital assets? Well, you know what? Our regulator didn't say it's not. You could call real estate title a digital asset. It's digital and it's being transferred and it has value. So it's probably an asset.
Asset, exactly.
Right? And this is what I meant about government being bam bam. From what I can tell, they didn't mean to say no. The stuff that nobody's buying or selling crypto, you're just using it as a tool the same way you have copper wiring. We're not trying to stop that. However, this is the bam bam thing. The words they picked were not accidental, and the words they didn't say are not accidental. So if you wanted to say the use of blockchain purely as a technology for productivity reasons is fine, they could have said that and they didn't. And in the absence of anything else, Jackie, I think you understand. Well, wait a second. What if we pursue this real estate title thing, but it's considered digital assets and we didn't ask for, you know what? You just put your resources towards some other project, and yeah, that's it. I mean, it's just a tool. We do have credit unions who are involved in actual like crypto, partnering with crypto exchanges so you can buy and sell Bitcoin without leaving your credit union app, right? Now, these are Bitcoin buys and sells that people can do anyway.
Right.
They're just doing it via your banking app the same way you can connect your brokerage to it. It just makes it a little bit easier to send the money back and forth, and you're using your trusted provider versus some crypto app you just downloaded 5 minutes ago. So my point is there is, regular crypto, the way the general public thinks of it. Yeah, there's some of that. But the main thing is just the use of a tool. Imagine if it took 5 years, 10 years, whatever, for your regulator to be okay with you using this thing called the internet, right? And from 1995, 6, 7, 8, 9, 2000, 2001, you were gun shy about using email. Major handicap you'd have, right? Against your competition. You didn't want to have a website. And it's all because your regulator was worried about people losing money in the stock market because of the dot-com crash, because there was a bubble and it crashed. Meanwhile, that stops you from doing online bill pay, which is just useful.
Right.
Fear about A is stopping progress in B. And that's kind of the main message I say. And Jackie, I'm aware in our 10 minutes now, I've already said the same message like 3 times, but that's what it really is, and from a political perspective, whether we like it or not, use of blockchain as technology is politically easier and less fraught with debate and peril right now than is the use of owning traditional, what we call cryptocurrency. It's easier.
No, I think reiterating the message is really important because, again, for those that are listening, sometimes we do have to hear this more than once, and also not everyone who's listening might be aware of what blockchain is or how it has been used, and the future, the ability of being able to integrate it into traditional businesses in the future in a comfortable way, similar to the internet. Again, there's been a lot of media hype sometimes that creates, like you mentioned, a fear factor. of not wanting to explore a technology when in fact the technology is a tool that can assist both the businesses as well as the consumers. So I think this is really an important message both for the policymakers who might be, and again, I know that you can't talk politically, but I really want individuals who are listening to think about the not having it be a political message, have it be a use case message, for real.
So, and to get out of politics, or at least be bipartisan in politics, I'll tell you this, that, if I take off my credit union hat, right, where my sole focus is America's 4,800 credit unions, put on my American hat, I credit Democratic administration. I'm a Republican appointee. I credit a Democrat administration, Clinton Gore administration, for one of the reasons America did so well with the internet. This incredibly disruptive thing that put tons of people out of work, but we got the most upside. In 1997, they put up on whitehouse.gov 5 principles for this new thing, the internet. I encourage people to Google it and find it. It's kind of a trip to read now. It talks about the information superhighway, if you remember.
Yeah, I remember that. I remember that.
Yeah. And the first one is, hey, there's this new thing. For one thing, they were using it. They posted it on whitehouse.gov. That was a website that had only existed for like 2 years at that point. So that's a signal, right?
Yeah.
And then, they had 5 principles. Number 1 was the private sector shall lead. That we don't want to create new entities, new taxes, whatever for this thing. Stuff that's illegal is still legal, like fraud's illegal, theft is illegal, distribution of certain materials is still illegal. That's true anyway. And you know what happened next, right? America won the internet. We got the most jobs, the most headquarters, the highest investment returns, the most people who had life-changing circumstances because they were at a startup and they got options and that sort of thing. And thank God for that, right? And again, I'm crediting a Democrat administration, Bill Clinton and Al Gore, because we certainly got a lot of downside, like every place else in the world, right? We lost all of our video rental jobs. All those strip malls, blockbusters went empty, and those people lost their jobs. Well, guess what? That happened in Mexico. That happened in Canada. They got that downside. So did we. However, we in America got the most upside you could out of that, meaning we have the headquarters for Netflix and for Hulu, etc. People got in early as employees. The investors who got locally, endowment funds, venture capital funds, the police and firefighters union that invested in the venture capital fund. We got as much upside as you could while getting all the downside everybody else did. Right? And you could go down the list besides video rentals, print media and travel agents, etc. What's terrible, Jackie? Terrible is disruption happens and you get all the negatives. And you get very little upside, right? That's terrible. So if you think that blockchain and crypto is a fad, and if you feel that way, then I wouldn't worry about it. It's all going to go away soon. And, that's that. But if you do think it's disruptive, I think it's imperative, if you're in a position to make policy, that you make sure this country gets all the upside it can. And boy, are we positioned to do so. We have everything in place to absolutely dominate the digital asset economy. Everything that already makes us awesome. Our universities, our engineering talent, our venture capital industry, our investing apparatus. We have a massive consumer market. Otherwise, we're just going to get down the road all the positives. A small number of positives. The same way Canadians and Mexicans can watch streaming media as consumers. Like, that's cool. That's a benefit. But that's all they got in return for losing all those video rental jobs. They didn't get the investment. They didn't get the headquarters. They didn't get any of that. So if this stuff is useful, blockchain and crypto, we're going to use it eventually. But, that's why I think it's so important for anybody in policymaking to make sure that we can get what we can easily get, which is tremendous upside to go along with the downside.
I agree with you. And I look forward to how you are kind of navigating this in the future, and how the credit unions are navigating this in the future. I look forward to again, seeing how policy is developed, which will support the development of business in all industries. So I want to thank you for being on. Any last minute thoughts before we sign off?
No, just folks have ideas on how credit unions can use these things. I don't endorse anything. We don't have a whitelist, but you can hit me up on social media or my Hauptman@NCUA.Gov. If you hit me up besides government email, all I'm going to reply is, please send this to Hauptman@NCUA.Gov, because I have to conduct my business on official email. But my point is, you can get in touch with me. We don't have a white list. People come to me sometimes and think we can recommend their fintech solution. I don't do that.
Right.
But sometimes it can be useful to come directly to the board, especially if you're a credit union and you're a little wary of your examiner. You can come to me directly. I like trying to get smart on these things and learn about it, but again, we don't recommend it. And last thing I'll say is the FDIC, you know, it's a very similar agency to NCUA. However, they insure 10 times more assets. Their insurance fund is 10 times larger. The answer basically is Citigroup, Wells Fargo, Bank of America, mega trillion-dollar banks, right? There's no equivalent. Well, so we only have 10% of the so-called banking assets or credit unions. Well, we're 10% of the market, like a left-hander is. If you know anyone who's left-handed, ask them if the world caters to them when they make scissors and when they make can openers and when they manufacture golf clubs. Do they cater to the 10% or do they cater to the 90%? The answer is they cater to the 90%. Nobody has anything against left-handers. It's just they're 10% of the market, right? The 90% of any market is going to get attention. Well, in the banking world, credit unions are the left-handers. We're the 10%. So on top of everything I said earlier, if you are the left-handers of the system, you are credit unions, you are only 10% of the banking system, you can't be a pain to work with. The banks can be banks and their regulator, they can be bureaucratic. They can be a pain. It's not good, but they can get away with it. The left-handers at 10% cannot be a pain to work with. So I always encourage people to contact me directly. I'm always trying to get smarter on these things, and I'm aware the industry is moving rapidly. But that'll do it for today. Thank you.
It is definitely moving rapidly. I'll also include your contact information in the blog below. So if people are listening and they don't have paper and pen because of being, you know, driving or whichever, just come back to this episode and you'll be able to contact and ask your questions. So I truly appreciate your being on today. I look forward to seeing you at the future conferences that I know we'll connect on.
Bet.
And thank you so much, everyone who's listening. As I always say at the end of my shows, be kind to yourself, be kind to others. We're also interconnected. And today we are all part of one world, even more so. Thank you so much.